All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx, coming to you live from the live trading room over in Discord. This is the Dr. Stoxx live trading room. And if you're interested in joining me, a big group of very nice people to trade with throughout the trading day, all levels of experience, from brand new folks who are just trying to figure out how do you buy a stock to people who trade for a living and everybody in between. We've got them all in the room. I jump on the live mic most afternoons. I do a little bit of trader training. We look at charts together. I take chart requests and we kind of look at what's setting up and what's not in the market. Now, whenever I make a trade, I let you know. I give you my entry price, stop price, target price, reasons for the trade, and I manage the trade until we close it out. So if that's of interest to you, go over to drstoxx.com. That's DRSTOXX. Your one-stop shop for all things stock trading since October 2002, if you can believe it. A couple of dozen years we've been doing this. And if you're interested in joining us, go to the subscribe menu, scroll down to live trading room. And if you're interested in just options, you can try our live options room. We just launched that about a month ago. We've amassed a cumulative ROI of over 500% so far on closed trades. So if that's of interest to you, go ahead and join us. And if you join both, you'll get a nice discount. Okay, let's give a go. First of all, I want to go to FinViz. We're going to look at the 10-minute charts. So we can see that the early trade this morning was all downhill from the bell. It was actually green last night. It was green early this morning. It was green when I rolled out of bed and was looking at the indexes. And then it was all downhill from there into the bell. We had a little bit of housing data ahead of time. Before the bell, we had the consumer sentiment, which was a big miss to the downside, come out at 10 a.m. And that just kept the ball rolling downhill. We've also got, Mexico, Canada, EU, and China tariffs all on the horizon, getting closer and closer to those deadlines. We're starting to get some headlines coming out saying, "Oh, we're negotiating. We're still talking. We're still talking. Don't put on the tariffs just yet." Nobody wants tariffs, of course. We don't want them. They don't want them, but they are a pretty powerful negotiating tactic, and that's how they're being used. So we've got tariffs to price in. We've got a weakening consumer, big time, to price in. We've got GDP on the horizon, durable goods on the horizon, PCE prices, the Fed's favorite inflation read, on the horizon on Friday. And tomorrow night, the biggie, NVIDIA reports earnings. So a lot for the market to digest this week, as always. It has been a downhill slide. We're about 6-7 days now in a downhill mode. We're a good 3 or 4% below all-time highs for the S&P, the NASDAQ. The Russell 2000 is way below all-time highs. They haven't been near all-time highs in a while. And so, it's a correction 101. It is technical analysis 101. It is trading 101. It is what it is. We are in the room, at least I'm speaking for myself, in a bit of a drawdown. Nothing too horrendous because we have been keeping our sizes small. We've been keeping fairly tight stops, and we're not doing anything real crazy right now. I have been yesterday and today buying and nibbling on some things, not all of which have worked out. And again, that's just how trading goes. But when you're in a position like this where the market has been falling and your longs are not working, but it's already too late to get short because everything fell so fast, right? Everything pretty much happened in a day and a half, just to be fair. It was a big slam on Friday last week, a little bit of follow through yesterday, and some more downside this morning. Everything just happened so fast that we really weren't able to get on board with that, with that move. So it was more about a defensive posture, and now we're kind of waiting to see is that it? Are we going to get any more downside? Are we going to get a little bit of a technical bounce, which is what we're getting now, at least slightly, slightly. We're getting a technical bounce, and is that going to last, or is that going to roll back over again into the close? We don't know. We can't predict where the market is going, but I'll tell you what I think. I think that we've got a good 1 to 2 days of upside as a relief rally. Then it is all about NVIDIA. I think the market can brush past durable goods, brush past GDP. The PCE on Friday will be a factor, but I think that's going to come in pretty good. I think the market will like the PCE prices. But if Wednesday night, if NVIDIA misses or lowers guidance or has anything negative to say, we're downhill fast and hard with a new leg lower. If NVIDIA comes in good, however, I think we're going to gap up and probably hold. We'll get a little more upside on Friday, and maybe then next week we've either cleared some of that interim resistance that we've built up and we're starting to peg back higher toward new all-time highs, or we get more tariff worry, recession worry, consumer worry, and it's right back down again next week. Not this week, next week. I think we do have a couple of days of grace period here this week, and then we'll see. Okay, so let's do this. Right, we had the big slam down early, right? NASDAQ down, 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 down. These are 10-minute bars. A full hour of downside, about an hour of sideways chop to build the little base, and then a nice little rally from about 11:30 into the 1 p.m. pivot hour. You have two pivot hours, by the way. You've got the 10 a.m. Algos are usually pre-programmed to go either long or short. They tend to exasperate the downside, they exasperate the upside, or if it hits a certain pivot point, a level that is predetermined by computer stuff, AI stuff, that's why they're called algorithmic traders, right? Then it will bounce back and fade the first move. So we get past the 10 o'clock pivot, you tend to see a pretty good stable move between 10 and 1. It's either going to be up or down depending on the overall trend of the market. And then from 1 o'clock on, we have a whole new market to contend with. So right now, we had a chop down at the bottom. We're getting chop up at the top. Let's see where it goes into the close. So let's jump over to some charts. Now, I'm going to look at indexes first. The S&P 500, we are under the all-important 6,000 level, and that is a good round number, and it's probably going to act as a little bit of resistance if we start to bounce back up into it. 6,000 is pretty close to where we closed yesterday, opened today, and we're now, we're good 40 points below it. So we've got some work to do if we're going to get back up above that key level. And as I said, I do think we've got a day or two of some good solid upside, probably an upside day tomorrow. And then Thursday will only be up if NVIDIA is up. We'll have to see where it goes from there. What I like about this morning is that we are approaching, we got way below the linear regression channel. We've gotten back to that 2.0, all important 2.0 standard deviation. Typically, when you get into that area, that 2.0 standard deviation, that's where you start to see, not necessarily immediately, but you start to see some dip buyers coming in, some valuation buyers coming in, and typically flags a good reversal. This is the 100-period moving average, this thick green line, and you can see that whenever we get down to that level, we tend to get a pretty good reversal. This is kind of what I think we're going to see. This would be today's bar, this would be tomorrow's bar, and then if we're lucky with NVIDIA, we get a few days of upside as follow through. That's kind of where I think we're going, but all bets are off. We could see this, however. We got down here today. That bar actually looks a lot like today. And then if we get bad news overnight, or if we get NVIDIA, this is going to be an NVIDIA bad day, right? If NVIDIA misses tomorrow night, that's what Thursday is going to look like. And then we can kind of see what's settled after the dust. But keep an eye on this 100. This is an important level. It'd be great if we could get back up there. Where is that? Where would that be? Around 59.78. So we've got a good 16 points to the upside we need to get back up there. We were up there this morning, but now we're well below. So that's the NASDAQ. I'm sorry, that's the S&P 500. Here's the NASDAQ 100. You can see we're much closer to the 100-period moving average. We tagged it here. We tagged it here. We tagged it here. We got below it here and bounced. We got well below it here and bounced. So we don't want to see this kind of a move or that kind of a move. But something like one of these guys would be very nice to see today with some follow through to the upside tomorrow. We got stopped out of TQQQ. So we bought some TQQQ yesterday when it was down here in the pink zone. It was holding. It was stable. we thought we were going to play. We were being a little bit, a little too clever by buying ahead of the bounce. Right? Typically, technical analysis 101, you want to wait for the bounce. I was impatient. Even after 23 years of trading, it still happens. It still happens. And the good news is that we were in a smaller position size. We were also in a short of Tesla today. Let me show you what happened to Tesla. Wow, way down here. So Tesla was shorted up in this area here using TSLS in the live trading room, and we're still short puts in the live options room. And it was in this area here as it started to break out of this little sideways consolidation, right, on overbought stochastics in a, not a downtrend. This is not a downtrend, but we're down here in a very weak tape and some negative news coming out of the company. And we're underneath the 21 period exponential moving average. The 21 is below the 50. So you can see this is like an early bearish read on the chart. We pounced on it. It worked out very well for us in both rooms. And so far, so good, especially for our puts, which are doing really well. I think Tesla will bottom out at around 275. It's at 298. Why do I say 275? Well, if you go back to that level, you're going to see it like here at this top. You're going to see it at this bottom. You're going to see it over here in these tops. 270, 275. That range has been either support or resistance going way back. And that's typically where you do see price start to stabilize in a big drop like this. So this is way down, right? We were way up here at almost 500 points, almost 500 handles. And now we're down under 300. That's a big 40% haircut in one of the big mag stocks. And yeah, I don't know. I guess that election tailwind is not proving to be so windy as people thought. Anyway, it is what it is. It's a good short for now, down to 275. I don't think I would hold it much past that because, Mr. Musk always has some tricks up his sleeve. Okay, let's take a look. I do have I want to show you a couple things. So Bitcoin is in a lot of trouble. It is in a lot of trouble. So here's the deal with Bitcoin, right? It ranges. We had a long range way back here. Right? This is multi-month range. There we go. There's your resistance line. Here's your support line. And it was in that range, slightly downtrending for months on end. And then we had this massive breakout, really big breakout that doubled the price of Bitcoin in just 2 months, 2.5 months, doubled the price from 50 to 100 plus. Then another range. And this time was up here at the highs, which is always a good thing. You really want to see the market consolidate after a good, healthy doubling run like that. You want to see it consolidate. It's usually a good time to buy the support lows, sell a little bit off the top at the resistance highs, buy a little bit more back down at the lows, sell a little bit more at the highs, right? You can play that range, and it was quite a nice range. We did play it a few times. We got stopped out a couple of times as well. But anyway, today was just horrible for Bitcoin. Absolutely horrible. Now, either this is the mother of all bear traps, and the only way that's going to happen is if it goes right back up again tomorrow, or this is the beginning of a pretty major downtrend, and I don't want to have any part of it. I'm not really wanting to short Bitcoin because, this could really flash around the other way pretty quickly, and I'm modestly bullish on Bitcoin over the long term, but I'm not going to be buying this here. In fact, we have some of the funds, the Bitcoin funds in our wealth building portfolio. It may be time to close one of those guys because they both have had a nice run. It might be time to lighten the load a little bit there. Okay, so that's Bitcoin. Why is Bitcoin falling? I don't know. I've been looking around. I've been asking some of the guys in my pro trading group. Nobody knows. The guys on CNBC were all scratching their head this morning, wondering what's going on with Bitcoin. Nobody knows. If anybody in the room knows the inside scoop, you let us know. But I'm in the dark, as much as anybody. But here's one thing I do know: if Bitcoin is weak, that and Bitcoin has been playing a safe haven, especially for those with a lot of cash on hand. Where's that money going to go? Well, if it's coming out of Bitcoin, it's probably going to go into gold and silver. This is what I'm thinking. So gold is down today. Everything is down today, and it's down on recession, not recession worries, but it is down on just a general kind of squeeze on the economy. Right when the consumer is not buying stuff, gold, any asset really doesn't look that great. So, but I do think if Bitcoin continues to fall, you're going to see gold catch a decent bid. Where would I like it? Right here at the 21 period moving average. It almost got there this morning, has bounced a fair bit off the lows. Let's see if it can get down there maybe tomorrow or the next day. The other one I like even better, however, is silver. Silver has a little bit more of a downside, a little bit more of a pullback. The 21 is nicely above the 50. We tagged the 200 period moving average just this morning, and we're holding. It's not a buy just yet. We need to see some green. We need to see that price momentum start to swing back to the upside, and we're not there yet. Maybe a bit of a dip between the 200 and the 50, and then a good reversal back up, closing on the highs with lots of good volume. That's a possible buy signal. Until then, it's not. It's just a wait and see. But I do think silver has a good move up to the upside, especially if Bitcoin continues to weaken. The other thing that's really interesting is that the homies are up today by a lot, right? They're up almost 3%, 2.7%. And it's a nice looking 3-bar reversal. Now, this is an ugly chart. So it's downhill all the way with the LRC. 21's below the 50, 50 is below the 200. Price is down here near 52-week lows. It is not a buy just yet, right? You're going to get really frustrated if you buy these kinds of strong days down at the lows. Not that you can't make some good bank that way, not that it can't do really well over the next few months, but more likely and more often you're going to see price just churn sideways like it did right here, and you're going to get really frustrated. It's going to be a little bit up, a little bit down, mostly down over 2 or 3 weeks. And then you get out, right? It hits your stop, you get out, and then 2 days later, it's way up here. Oh, man. So that's the kind of frustration you can get with these downtrending charts near 52-week lows. As Bill O'Neill liked to say, prices are down at the lows for a reason, right? They're out of favor with the market. Until you start to see that change, it's a no-go zone. But it is interesting. On a day when we saw the consumer fall hard and we saw housing prices go up a little bit, they ticked a little bit higher this morning. Here, the home builders are up. So keep an eye on that. And with the home builders come all the great retail plays that support them, the bricks and shovels kind of guys. Your HVAC, CARR, your home improvement stores like Home Depot and Lowe's, flooring stores, construction names, the home builders themselves, of course, all those guys. In fact, you could buy most of those with NAIL, NAIL, which is also doing as well as this one is, only more so because it's leveraged. Keep an eye on that. I don't think I would really be comfortable buying the homies until it gets back up above the 21 period moving average. But that could happen in a day or two. What else did I want to look at? I do have a list of greens. So let me share with you a few stocks that I do see starting to set up, but not there yet. So PLTR, everybody wants to buy the dip in PLTR, and here's the dip. It's you never like it when it comes, and when it does come, it becomes very, very hard to pull the trigger. But I tell you, you're not going to find a dip buy setup better than this. It's just not flashing the buy signal yet. So we have to be patient. We're not going to buy it here. 50 period moving average, pink zone, uptrending LRC, stacked MAs, everything is going green for it. But volume is still bearish, and we need to see a good close above the open. We're not there yet. Bonds are really big today. We have bonds in our wealth building portfolio. I have a big position in TMF myself, and this is looking really, really good. If you go out to the weekly chart, you're going to see a very wide inverted head and shoulders. If you go to the monthly chart and take a look at a multi-year stretch, we won't do that, but you're going to see down, 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 inverted head and shoulders starting to move back up out of the right shoulder. So keep an eye on bonds. Of course, bonds tend to go up when there's worry about the economy. They also tend to go up when the Fed is more dovish. Now, the Fed has not been dovish, but there is worry about the economy. So bonds could be flashing an early signal of recession. We don't want that to happen. There are other signals out there that are impending recession. We're seeing the labor market coming way down. What was the other thing? Somewhere in the presidential cycle, we tend to see recessions happen at exactly where we're at. But there's nothing concrete yet, right? We're still growing. Earnings are still good. GDP is still moving in the right direction. So we'll just have to wait and see. We got into Cure today, and this is why inverted head and shoulders up here at the neckline, the right shoulder recaptured the 200. Sorry, that's the 100. Yesterday, 21 is rising, 21's above the 50, fresh. This is the kind of bullish reversal of a long downtrend that you want to see. The healthcare sector has been a lagging sector. My thesis is that with money coming out of the big mags, the big blue chip tech stocks, that money's going to go into sectors like this one. And you're seeing the big druggies, Lilly, Merck, Pfizer, they're all outperforming in the last month or so, really outperforming. So this is a good sector to be in. We just have to be a little patient with it because not most things today just aren't that hot. But this is green on a very red day, so that's a good thing. DOCS waiting for this one to flash a buy signal, not there yet. It's a big power gap up on earnings, right? Big power gap up on earnings, follow through the next day, a little bit of a test at the top of the gap. 21 period moving average, midline of the LRC, oversold stochastics, very, very good volume balance. It's just not telling us to buy it just yet. Fortinet, your number one cybersecurity play, showing a nice little hammer candle at the rising 21 period moving average. This looks very good. It's been outperforming. It's not falling like the rest of the market. That's always a good sign. LRN, not looking very good today, but it is another pullback to the 21. Had a hammer candle yesterday. This is a good point, right? It looked very good yesterday. Hammer candle in a down market at the 21 period moving average after a pretty decent pullback with oversold stochastics, right? It was all lining up. And there was no follow through today, and it's been pretty much trading down near the lows of the day. That just shows you, and this is one of the things I teach my private trading clients, don't buy until you get past the high. So when you get past yesterday's high, then you can buy. If you don't get past yesterday's high, just wait, just wait, just wait. Expedia is up over 200. Is it a big power gap on earnings? 52-week highs, maybe all-time highs. Nice little sideways consolidation. Tight range between 195 and 205. We're in the middle of that range at 200. This looks good. It's one of those low risk, low reward kind of trades, right? You can put a tight stop somewhere below the 21 EMA. Your target is probably going to be 215, 220, maybe. And I guess your target was probably going to be up here in the blue zone. Yeah, about 220. And it's not going to get there overnight. It's going to be a long, slow, sluggish ride up there. But I think it's going to get there. And this is one of the best charts, one of the strongest charts out there. We went long INOD for pretty much the same reason. It was a big up on earnings, holding the 52-week highs. Excellent fundamentals, excellent growth. One of those under the radar names that's doing nothing like the rest of the market. Right? The market's down into 4 or 5 days of really heavy selling. This one is up near 52-week highs. That's outperformance. That's alpha. That's the kind of stock you want to buy in a market like this. Upstart will have a moment. The 100 tag, oversold stock, trying to get back above the 50, but it's not there yet. Rambus, big slide. I'm going to take that one off. Affirm looks like Upstart, similar kind of thing, down, tagging the pink zone, almost at the 50. Roku, strong chart. big power gap up. We closed the gap. That's not exactly what you want to see. But given what the market's been doing, yeah, it's been sliding downhill too, but we're at the top of the gap, the 21 period moving average. Let's see if it can give us a buy signal in the next day or two. Root looks really, really good right here with an inside day doji, but earnings are tonight. Net, nice orderly pullback, really, really nice orderly pullback. We just need to see it moving the other direction. App has closed its power gap, tagged the 50, bounced a little bit. It's almost ready to go, but not yet. Duolingo, actually, this one is ready to go. So we had a big rally up to the 52-week high, came back in with the market. Yesterday was outperforming, today outperforming, and we've got earnings too close, though. This one, TPR, we just bought this in the main room. Nice looking hammer candle. It's not above yesterday's high, so this is a little bit of an anticipation, but we only bought a half. We can add on another half if we want to. And AGQ is the silver play. All right, guys, so I'm going to stop the recording here. I will go over and take a look at your charts that you are interested in, and then I'll publish this and get back into the room in a little bit. God bless everybody. Bye for now.